Guys, what's up? We are in Birmingham, Alabama. Check out this building right here. There is Hattie B's. If you know anything about Birmingham, we're in the Lakeview District. Hattie B's, you got the Mayor Restaurant, you got other restaurants, you got other things going on over here. This building right here, Rise, was just purchased by this man right over there. Do you see him? Right, where is he? Right there, Mr. Gary Gao. Just purchased this building. We just did an interview with Gary, just kind of almost like introducing a little bit about the building and a little bit about him. If you want to listen to that interview, click the link right here above me. And what we're going to do right now in this video is we're going to take a tour of some of the upstairs units of this building that Mr. Gary Gao has. So here we go.
All right.
What's up, Gary? How's it going, man?
Good.
Hey, so grateful for you for giving us a tour. What are we going to be doing first?
We can walk into one of the units, showing you what they look like.
So tell us again, how many downstairs units and how many residential units upstairs?
So we have 54 unit apartment building. It's 54 units of apartments. They are 1 bedroom, 2 bathrooms, half and half. And then we have 8 bays of retail. They're all triple net.
Define triple net, because I know a lot of people talk about that, and I don't know if everybody knows what you're talking about. What's triple net?
Well, okay, so if you own a rental house, you got to cover the maintenance and property tax, insurance, and all that. Triple net is pretty much the tenants are paying the insurance and the property tax and other repairs. So it's you can sit back and relax. It's more retirement. But you also pay a premium for it.
So guys, we in our first video we talked about how Gary got this building, and so we're going to ask him about the numbers here in a second. But okay, we're coming on in here, and we've got 54 units.
Yep. Is the elevator fixed?
Yeah. Yep.
Is it an easy problem or?
When I got in here this morning, it was already running.
Okay. Oh, already? Yeah. That was quick.
And the technician, when he had gotten here, it was already up and running. So it could have just been a lag.
It's just a light fuse or something. Okay.
Cups in a paper.
Yeah, he's my leasing manager. So usually for this, you want to make sure your tenants are being taken care of. They're not being left behind. So, which is what happened to the previous owner. The previous owner pretty much just let the building go a little bit. No offense to him. They're a great company, very established company. It just this building's a little too small for them, so it's too small for them to take care of. Okay, you can come in. So this is a unit a tenant just moved out, so we haven't done much to it yet. Just giving you a view. This is a 1 bedroom, 1 bath unit.
Okay. So this is the rear of the building, out this window here.
And you can see the view.
And the view, yep.
Point to the skyline, the city.
There we go, got it.
So I always joke about whenever you buy a piece of property or real estate in general, 3 rules. Rule number 1, location. Rule number 2, location. Rule number 3, location.
So when they say location, 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 that's not just a myth. That's not just a saying. It's real.
It's real. So whenever you're trying to buy a piece of property, this is my rule, okay? Buy the ugly house on a pretty street, not a pretty house on an ugly street. I have all these pretty, like the newer build stuff over there to set the comps for me. And people will be like, oh, this area is, you have competition over there. Well, I'm the only affordable option over here. You have people over there, they're charging $2,500 a month, mine $1,600 a month. And here's one very important factor nobody's talking about. This tariffs going on, that means nobody can build a competition at the price I'm buying right now.
That's right.
Yeah.
That's
so right. All these new builds, they're about $300,000 a door. I essentially pay about $140 a door for this apartment. So,
wow.
Yeah.
So this is a 1 bedroom. What is this going to rent for?
This one's about $1,450.
Wow.
Yeah. Location, location, location. So whenever you try to rent a tenant, this is a little trick, okay? How YouTube video talking about this? Little trick. You don't just tell tenant, hey, we have this, we have that, we have this, we have that. Ask them questions. where do you work? Why do you want to live in downtown? Ask them what they need. Once they figure out what they need, target those needs. Hey, you work at the UAB, you work at a hospital, right down the street. You work in downtown, walking distance. Why do you want to live in downtown? You like the convenience, right? We'll have restaurants right down the street. And that's it. So you target the needs, and it's a sales game.
So $1,450 for a one bedroom. So you just mentioned a potential someone who might work at a hospital. Who is your typical tenant? Who is someone? What is the avatar of someone who is going to be renting a one bedroom or maybe even a two bedroom unit downtown in almost like a loft kind of space?
So most of my tenants are less than 40 years old. Most of them are like the younger professionals that work downtown. A lot of them are single, so it's easier. Young professional is really what you get. And people don't realize is renting is a lot cheaper than buying a home these days, especially when they're single. They only have one person. They don't want to pay the mortgage payment for the entire house for one person. Because you don't see one bedroom houses at all. So they like to rent. And a lot of people don't realize is if you invest the down payment amount that you would normally put to buy a house, the return from the investment pays for your rent. So you actually rent for free. A lot of people don't realize this. All
right, so Gary, here's all the stuff that people want to know. How much you buy this building for?
Okay, $14.5 million.
$14.5 million. So in the previous video, we asked you how you got into real estate. You kind of just told us you kind of did little by little and kept building up, kept doing more and more and more. But even what you were telling us doesn't really add up to $14.5 million. How do you secure $14.5 million in order to pay for this? How'd you fund it?
Well, first of all, you have a mortgage. You have a loan, so it's 80% LTV, 20% down. So I set the equity size of $3 million. I'm going to be honest with you, okay? I don't have, and I don't want to have all my eggs in one basket, okay? I have about $1.5 million of my own money in this building, which means I own half of this building. Okay, the other one, I just go to my buddies, hey, would you like to invest in real estate with me? Would you like to invest in real estate with me? A lot of people have seen my success and they're like, hey, Gary, you became a millionaire in your young 20s and you did pretty good. You own hundreds of doors. Can you help us with it? I'm like, I really don't have the time, but you just give me your money. I'll do it for you. We'll split the profit. So, and some people, they're like, well, your transcript is right here. I will be happy to give you our money. And the people give me their money, and you have this doctor give me $100,000, that business owner gives me $200,000, that person gives me $500,000, and then we have all $3 million secure. I'm like, look, I'm the sole guarantor for the loan. I'm the one calling the shot because you're investing my ability. So for example, if you own Tesla stock, you don't get to tell Elon Musk what to do. You technically own Tesla, so I just tell them, hey, let's group together, buy it.
So and I don't want to get into the super details because you can get way in the weeds with how you structured like the entity and but is it set up like a partnership or is it set up like a fund?
It's a fund.
It's a fund. Okay.
It's a fund. So this is, it got a little more details. Is in the South with SEC, I'm in the South we know that's like what, Southeastern Conference, but it's Security Exchange Commission. Right. I operate under 506C exemption, so which means I can only talk to high net worth individuals, accredited investors. Accredited investors. Yeah. So I set up under a fund. So basically, in the future, my goal is to BRRRR it out. BRRR, buy, rehab, rent, refinance, repeat.
So your goal with this one is you're gonna eventually refinance it out and pay them back their money, where you'll keep 100% of it. At that point,
they keep their ownership.
They keep their ownership.
Like for example, if the equity stack is $3 million, they give me $300,000, which is 10%. They can put their hand on the wall, say, I own 10% on this building. And the only obligation is you have to hire me as a manager. And that's so the goal is to refinance the money out because I bought it at such a good price, and then essentially have no money in the deal. When you have no money in the deal, and building still making you money, that's infinite return. And that's my structure for all my rental properties.
So you have no money in this deal of your own?
Currently, yes. But in less than 2 years, I won't have any money in this deal. The reason, let me tell a little backstory, okay? Good deals are being found, but great deals are being created, being structured. How I structure this deal. This is a grand slam. Okay, next one, I don't have swimming pool. I don't have fitness center in this building. So there's a limitation for my rent. So I cannot market to tenants that want a swimming pool or the premium tenants, okay? But next door, there's an apartment next door building. I'll talk to the owner next door, be like, hey, let's create a partnership. Create like more like a gym membership structure, okay? So basically my tenants are going to pay them money, let's say $75 a month to use their swimming pool, they use their fitness center and all that. And then because it's a gym, they hold all the liabilities. If my tenants slip and fall, don't call me. That's your gym right there. But then they reimburse me 50% of the NOI back to me. And then, no, gross, not NOI, they reimburse 50% of their money back to me. And after that, I can market to my tenants, hey, we have access to swimming pool, we have access to fitness center, we have access to conference rooms, so I can instantly bump my rent by $200 a month, at least, okay? And then with the fitness package and all that stuff, it's amenity package. So I don't have to wait for the 12 months lease to expire. You're like, hey, you want this access? You can buy a gym membership tomorrow if you want. So I can bump my rent tomorrow.
So it's just like what you were, so in our previous video, you were talking about how you had purchased a 10 unit in Inslee, which is downtown Birmingham. And the way you increased the cap rate or made the property worth more value is you raise the rents and decrease the expenditures. And that's assuming you're going to do that here too.
Yep.
So that's one of the ideas, you have to increase the rents to make the property worth more money.
Yep.
And when you go to refinance it, you get all your money
back. Take all your money back. Yeah, it's very easy. For example, I'm take out my calculator and show you how easy this is, okay? So for example, if I'm paying $500 a month for my landscaper right now, I think that's too much. I want to cut it down to $350. So 500 minus 350, I'm saving $150 a month on landscaping, right? Times 12, that's how much I'm saving a year. $1,800 a month. This is maybe just one phone call, change the landscaper, okay? If the building value at 6 cap divided by 0.06, if building's valued at 6 cap, with that phone call, I just created $30,000 worth of value in one call by changing the landscaper, because the new landscaper is going to be $150 a month cheaper. And it's very easy. Think about it. If you have AT&T, Verizon, T-Mobile right now, if you had T-Mobile, you switch to AT&T, they're going to give you a welcoming package. Their price is going to be cheaper than your current.
And you can apply that not just to landscaping, you can apply that to property management or your leasing agent. You can apply that to pest control. You can apply that to utilities. You can apply that to the gym membership.
Yep. Two niches. Increase your income, drop your expense. It's that easy.
If you were to able to increase this, the rents by $100 with a gym membership.
Yep.
I mean, you want to get your calculator out and show us that? I mean, that's going to create like an enormous amount of value.
Let's do calculator. All right. $100 a door.
Per door.
Per door.
Times how many doors?
54 doors, 12 months a year. So I increased my income by this much, okay? Well,
but you're selling it at a 6 cap, or if it's worth a 6 cap.
I usually I like to do 50% rule, because usually if you increase your income, half of that is your expense, gross and net, okay? I increase this much gross, half of that is my expense. So half of this is net. So I increase my NOI by $32,000 if I'm doing a 6 cap valuation.
Created $500,000.
Yeah.
You just created $500,000 of value like that.
Well, a few phone calls.
That's awesome. Gary, what else? I appreciate you giving us a tour of this unit. This is a 1-bedroom. It's going to rent for $1,450. And then what else is in this building? What other, how many different bedroom units? There's 54 total.
So 27 is 1 bedroom. 27 is 2 bedroom, 2 bath.
Okay.
So this one is a 1 bath unit. So.
Now, what about downstairs? Because, there's that whole commercial area where you've got restaurants. How many restaurants are there? 3?
We have 8 bays of retail spaces down there.
How many?
8 bays.
8 bays.
But some tenants they rent double space, some tenants that. So we have one vacant space right now. So we have 3 restaurants, 1 bar, and 1 office. So 5 tenants rented 7 spaces right now. We have 1 vacant. And guess what? I'm bought at 7.5 cap based on current situation. Basically, I bought 7.5 cap with a vacancy down there.
And what are your plans? How do you get, because I'm sure you want to attract a really solid tenant, a stable tenant to be down there, to attract more people here. What kind of steps do you take to try to get that unit filled with somebody who, with a company that's going to attract or can keep all the folks that you already have?
First of all, I don't know if you all, I'm going to place a leasing manager downstairs. So leasing manager is going to cost a little money, yes, but also decrease my expense with apartments.com or Zillow, all those expenses. So it pays for itself. Someone on the property to police it. Another way to do it is utilize the commercial traffic. Hattie B's Hot Chicken is like a local icon. Their foot traffic on Monday. Usually restaurants close on Monday. Monday afternoon, 2 o'clock, you still have a line in front of it. How about you just put a QR code, be like, would you like scan this QR code, get 5%, 10% off your first month rent and the rent with us and all that? Give something before you ask something back. So you just fully use your commercial units. Well, and also we have hospital over there, hospital nurses, and all that top market. We have biggest university in Alabama. So just, students now need places to stay. Honestly, some students will punch holes in your walls, but good thing is a lot of students, they don't stay here during summer. So they pay rent for 2 months while nobody's staying.
Yeah.
So, and another way is, you have all these local competitions and all that, right? But I'm in a special niche. I'm the ugly house on a pretty street. Get a good relationship with them, okay? They're like, look, if you have qualified tenant, but they cannot afford your rent, send them to me. I'll give you half of the first month rent.
Got to be creative.
Yeah, you got to be creative.
Remember,
great deals are created. Good deals are found.
What challenges came with purchasing such a big property like this? What are some of the challenges? What are going to be some of the challenges going forward now that you even have it closed on?
Well, let's see. The challenges with this deal is definitely the equity raising part, because you got to convince who you are. So you got to raise some money for the deal. Once you have a good deal, you got to find a good deal, and then you got to find the money. You got to tell people why this is a good deal. People have to trust you. And then I know a lot of people like to make a lot of money, right? I'm sorry, just be kind, okay? Let everybody all make money. You don't want to choke them now. Set your rule reasonable. Everybody's making money, okay? Your money is making in the back end. Bring the money in. Closing, it's different. So it's a lot different than closing on a single family home. We have 40 something contracts with this building. The fire sprinklers, the monitor system, we have elevator contract, grease trap over there. We have different dumpsters, one for commercial tenants, one for a residential unit. The towing company, the bulk internet, it's a lot different, way more contracts, a lot different than closing on a single family home. The closing cost me about 40 grand, just attorney. So, yeah. So,
well, that's to do all the SEC type of paperwork, right?
SEC type of, you gotta have an SEC.
The fund.
Yeah, you gotta have an SEC attorney to do it for you as well. Right. And the paperwork cost me 10 grand. You want to do it right, because if you violate, if you trigger SEC violations, that's jail time. Oh, yeah. What was the Wolf of Wall Street? That guy, Jordan Belford. Yeah, you don't want to mess with SEC. SEC is there to protect the little people, the people that don't make over 300 grand a year or have net worth over $1 million. So their goal is not make sure you're not scamming people. You shouldn't scam people anyways. I mean. So yeah, SEC, the rules are there, and then finding a good team. Okay, do I know how to fly an F-35 jet? I don't, but I can find the best pilot and pay the pilot to fly the jet for me. Do I know how? Do I have? I don't even have the time to manage a 54 unit like this. Do I have the time to manage a building like this? No. It requires someone full time right here. But you can find the best team. America is a country of talents. It's a capitalist country, and it's a country of talents. You can use your money to buy talents. I'm a firm believer in paying for talents and not overpay. I tell my guys, you have an empty paycheck. There's no cap. How much you're making is based on how much value you're bringing me. That motivate people to work as hard as they can to bring in more value. They find the best team working on the building. Tenants are feeling they're being taken care of. That's it.
Gary, first of all, congratulations. This is an incredible building. I've come, obviously, if you're a part of Birmingham, you come by here all the time. You mentioned Hattie B's. It is an icon. So many people come to this building. So congratulations.
Thank you.
Incredible asset. And thank you so much for your time. And thank you for giving us a tour. Appreciate it.
Of course.
All right, guys.
Thank you, Brian.
See you guys in the next one.